So another seller resolution, I would say, is plan for concessions. So even if you've got the sweetest, nicest house on the market, buyers are still looking for a little help here and there and maybe asking for some closing costs or some other sort of concession in their offers. And it's just not unusual.
Well, there's a reason that just about every home builder, production home builder, is offering rate buy downs. Welcome to Albuquerque Real Estate Talk, episode 564, and it's a special episode. It is our New Year's. Oh, thank you. New Year's 2026 episode where we're gonna go through some housing resolutions. We're gonna talk about myths in real estate and which ones to leave behind. We're gonna talk about, predictions and forecasts for 2026, because that's what we do at the beginning of the year. Every year, everybody does for everything. So we're going to do it for real estate.
We've done it for probably almost 11 years.
At least, yes. Yeah. So we're going to do our Albuquerque real estate market forecast. I'm going to do a longer post on that, actually. I've got it drafted, so I'll have that up where I take a little bit deeper dive in what we're going to talk about today. If somebody wants to, on our website, welcomehomeabq.com.
So I'm going to take my hat off because this is kind of annoying, but pretty exciting,
New Year's. Another year.
So Tego, I know we've got a lot of myth busting and predictions to make, but I also want to talk about Albuquerque luxury real estate because I was looking at the numbers. One of the things, Tego, I think in our market, is it about 750,000 and above, which they consider luxury?
Yeah.
Top 10% of the market, something like that.
There's different ways it's looked at, but yeah, that's one of the measurements. Yes.
So I was looking at it, kind of going, the number of properties active, pending, and sold in Albuquerque at 999,000 and above in the last year was over 1,000. So 1,058, but that's active, pending, and closed. But what was sort of interesting to me is...
So that's 10% of the market.
Exactly.
Yeah.
That's exactly right. 432 actual sales at 999 or above, so 1 million basically. But what's interesting is...
About 0.5% then.
0.5%. Okay.
Right? Did I do that right?
5%?
5%. No. Yeah, 5%.
I can math.
Yeah.
Okay. So of those 1,058, what's sort of interesting is 61 had expired. Like they had put the house on the market and it didn't sell in a time frame, and they pulled it off the market, or it expired, that actual property listing. And it was after average of 204 days on market, and the average price per square foot was $383 per square foot. So in that luxury range.
So this is the 750 and above, or
this is 999 and above.
$1 million
so
and above.
Basically $1 million and above.
Got it.
It's just easier to do 999 because people still think of that as $1 million, right?
Well, of course.
Right. So there were 10 withdrawn.
But it makes a big difference you're in Santa Fe.
There were 10 withdrawn. There are a few Santa Fe, though, in our market that are listed in our MLS.
Well, just so I don't leave people hanging, I mean, Santa Fe has a mansion tax now for homes $1 million and above.
Yeah.
So that's a whole nother conversation.
So there were 10 homes that were withdrawn from the market in that luxury above $1 million range. And what's interesting about that is they averaged $619 a square foot. But when I looked at it, one of those in there was that Breaking Bad house that they had listed for sale for $2,091 a square foot. So it skewed the numbers. So when you take that out, the average of those 10 withdrawn was $456 a square foot. I can think back to not that long ago where we would have never seen anything for $456 a square foot.
I recall back in the day when the most expensive home, and this is probably 15 years ago, was 300 a square foot. And that was like the top luxury home in the entire market. Every detail just high end. Yeah.
So when I was doing this, I was reminded of a time frame where I was helping some buyers, and I had set up a search for them of houses up to $80 per square foot. And that was my search in the different neighborhoods that they were interested in. It was up to $80 a square foot, and there were a few. Most of them were short sales. But then I increased it to 100 a square foot, and actually there were homes that my clients were buying for under 100 a square foot. So when I see 456 or whatever, that's just crazy. But the other interesting thing is canceled listings. So of the 900 or the million dollar and above, 97 of those homes were canceled in the multiple listing service. And the average on those was 377 a square foot and an average of 143 days on market. So that means they worked on it for 143 days before they said,
Let's talk about this whole idea of canceled. We call it canceled, withdrawn from market, removed from sale, whatever you want to call it. These are people that tried to sell and then eventually said, well, I guess we're not getting our price, or life changed, something happened, and they cancel. Now, some of those homes could have come back on the market.
You're stealing all my thunder, Tego. Come on. That's where I was going next.
Okay.
Like a lot of these, the canceled, withdrawn, expired, they pulled them from the market, tried to refresh them at maybe, hopefully, a better price, or they've done something to make the house more appealing. Visually, maybe they've repainted or whatever the feedback was that was maybe holding them back. So a lot of them did go back on the market and sell.
Well,
Not the Breaking Bad house, though, right?
Was
Yeah,
that the
yeah.
Pizza House?
That's the Pizza House.
The Pizza House,
Yeah,
yeah.
the Breaking Bad house. And that one actually...
Walter White's house.
Right. That was actually in both categories of expired and canceled. So it's a long road for that house to get what they think it's worth. Okay, so let's go back to New Year, new predictions, new resolutions and everything.
So, Tracy, it's a new year, right? So, everybody loves predictions like we were just talking about. And of course, we keep doing them, right? We've been doing these forever, talking about it. And, if we look back at 2025 and what we talked about same time last year, we're pretty close. I said we're going to have a little increase in home sales, which we did have, and we're going to see some price appreciation, moderate. Now, I said 3 to 4%. It looks like we're going to end up somewhere closer to 2 to 3% for year over year price appreciation across the board, which is pretty moderate, and that's below the long-term average, but that's why there's averages. So we had way above average in 2020 and 2021 and 2022. And now we've been below average for a few years, and it's so anyway. So we're going to do our predictions, but anyway, Estelle, you've got a list of questions for us to
I sure do.
go through. So what's topic one?
Topic number 1 is housing resolutions for 2026. What buyers, sellers, and homeowners should or shouldn't be doing.
Yeah.
So for sellers, what should their resolutions be, or what should they be doing?
I'll lead off with, if you are going to be selling, get serious about your pricing. It's not 2021. It's not 2022. It's not even 2023. 2025. And
2026.
you need to get past that. Well, let's just try
We're going
it.
into 2026.
Okay, yes, thank you. It's 2026. Thank you. The let's try. I knew that was going to happen at least once in this show. The let's try it, or let's see what happens. But if you do the let's try this price and see, you end up being let's chase it. So you end up chasing the market.
Right.
Right.
Typically.
So that would be the first thing, is just make sure you really do a good analysis and be realistic about where your house is in the market.
So another seller resolution, I would say, is plan for concessions. So even if you've got the sweetest, nicest house on the market, buyers are still looking for a little help here and there, and maybe asking for some closing costs or some other sort of concession in their offers. And it's just not unusual.
Well, there's a reason that just about every home builder, production home builder, is offering rate buy downs, meaning they're putting money toward the mortgage up front for the buyer to get that rate lower. And that there's a reason home builders do this, because they know that's what buyers want. They're really trying to get to a payment So that would be definitely on that list, Tracy.
Yep. I would say another resolution for a seller would be to realize that buyers want a pretty good condition home and that they are asking for repairs and really wanting things to be buttoned up when they buy the house.
I would say along that lines is also, if you are going to be selling, consider a pre-inspection. Pre-inspection is where a licensed home inspector comes out, does the full inspection like they would do usually during that contingency period, the contract to close period. Well, you do it in advance so that you can take care of any of those things and you don't have surprises while you're under contract and packing and getting ready to move.
And do you usually share those reports?
It's up to the seller what they want to do with that. And it just depends, if they fix stuff or anyway, that's a longer conversation, but that's a really important question that a seller should be asking.
And that's one we would really want to talk about before you decide to do a pre-inspection. This is sort of a sidebar because once you know the condition, then you have to disclose it. But if you're planning to fix things and get them all ready, it might be the better way to go. So
What else?
And one more thing I would say is if you're going to be selling, can just understand that home buyers are not going to be looking just in your neighborhood, and they're also going to be looking at new construction. So you have to compare yourself to new construction. How do you compare to new construction? Now, new construction for the most part are going to be more in outskirts areas. They're not necessarily, you're not going to find a lot of new construction in the near Northeast Heights or the far Northeast Heights, right? That most of the production is outskirts. So you have to weigh that in, but understand that assume buyers are going to be comparing your home to new builds.
So kind of to wrap up what sellers' resolutions might want to be, obviously a pre-market consultation with a great real estate broker, right? So,
Absolutely. And okay, let's do one more, which was if you're going to sell, know that it's going to take you longer than you think it did to get your home ready. And you're going to leave money on the table if you don't start getting it ready months before you're ready to actually sell and move.
okay.
Yeah, big purchases. Let's go to buyers. What should buyers' resolutions be in 2026?
Sure.
I'm going to say it because we say it all the time is get your financing figured out, get your budget figured out, figure out what the interest rate is. I mean, this is step one, always, always, always. Of course, people usually start browsing homes online before they actually talk to a lender, but getting that figured out right away is going to make your life so much easier and a lot less stressful during your home search.
Well, and you might have an idea as a buyer of what you think your purchasing power might be, but until you get with a lender, you don't have as much clarity.
You don't.
Right.
And then you can also compare, like, when you're ready to make an offer, if you ask the seller to help with a mortgage rate buy down, how much is that going to affect your monthly payment? So all that stuff, getting that stuff done early is going to be a lot helpful, really helpful.
So along those same lines is a lot of times people are just looking at like what's the monthly payment going to be without the interest and taxes and all those other things. So it's sort of like know your full buying power of what your actual payment's going to be, not just
Yeah, not just principal. I know what you're trying to say, but it
Principal and
wasn't coming
interest.
out. Yeah, so a
Taxes
lot
and
of people will
insurance.
just look at interest. They'll shop the interest rate and think that's the only thing. Well, no, of course it's not. It could be, an HOA could make a huge difference, right? We just did a single family home. The HOA is $100 a month, right? Did you consider that in your budget? So
we just did one.
yeah, we just bought
That
one.
one we bought's $100 a month.
Yeah.
Wow.
Yeah. So well, but they take care of the front yards.
Right. They do the landscaping and the watering of the front yard.
Right. So anyway, my point is all of those things matter. It's not just the principal and interest payment. It's also what are the taxes going to be? Or is there going to be a tax reset, in a year? And, what's the insurance going to be? It could make a big difference if it's in a mountainous area, for example, or in a flood zone, which we do have in the southern part of the valley here. So, yeah.
Okay, so for buyers, I think one of the things that we're talking about for 2026 is that when you're negotiating your home purchase, to be careful on that fine line of negotiating for concessions from the seller so that it's fair. It's win-win for everybody. It's not like we're not at the bottom of the market and desperate sellers. We're in a fairly balanced market, right? So you might be able to get some concessions, some repairs, maybe some money towards a buy down, but you're probably not going to get, $50,000 off a $350,000 house.
That's a great point.
Yeah, and it does depend. And along that line is we have time for sellers to be picky to a certain extent. However, you can't freeze up because if the right house hits the market, you have to be ready to go and know if it's going to be in your budget and make sure that, with your realtor, you're doing all the negotiation strategies, and there's a bunch of them. That could be a show in itself on how to formulate your offer to make it a winning offer for you. So yeah, be picky, but don't freeze up. Be ready to go when it's time to go.
Well, then that goes back to getting, like, when you do find the house that you want to make sure your finances are in place so you can quickly write that offer, because most likely people are also going to like that house if you like it.
Right.
100%.
I would say the final buyer resolution that we really want to talk about is make sure to ignore the media noise, because owning is a long-term life decision, not a reaction to the current headline news, right?
And the reality is most of the headline news people see on real estate is as they're scrolling through their social media of choice, it's some inflammatory thing about real estate and what's going to happen, right?
It's always doom and gloom.
Of course, because that's what sells.
Yep. So
for homeowners, what should homeowners be doing for the resolutions if you already have a home?
You already have a home.
Good. Yeah.
That's a good one.
I would say know your equity position, know that you've got equity in your home, and, not what Zillow says on a good day, but your real range of what the value is versus what you owe on your home, and kind of what you can do with that equity if you need to.
Yeah, and the thing is, something like the Zillow's estimate or many of the other what we call AVMs that are out there that do an automated, valuation of your home, they're fine as a baseline. I mean, we offer one to our clients, but it's a starting point. It doesn't know what the condition of the home is on the inside, right? It doesn't know how old the roof is in many cases, and it doesn't know that the air conditioner is about to go out and that's going to be a $20,000 repair, right? Or whatever the number is, right? I know I'm exaggerating.
That reminds me of a house we visited a few weeks ago. We went to go and look at a home and give some advice to somebody who was considering buying the home. And we pulled up, and the house, right before the house, I was kind of on the right side there and looking, and it was a really dilapidated, weed-filled yard. And then we got to the house we were looking at, and it was clean, and it was an older home, but it looked fine. And then the house to the next to it on the other side was the front yard was completely full of rubbish and trash, like broken down things.
The junkyard.
It was a junkyard. There was a fence around it all trying to hide it, but the fence was coming apart so you could see it all. And I'm thinking an auto value did not see the two homes next to the home in the middle. And it made a huge difference because curb appeal is going to really hurt that nicer house in the middle of those two.
Yeah. So what you're saying is, know your real equity position. And then the next thing I would say is treat your mortgage rate like an asset, in the sense that if you have a 4% or less, or even 4.5% or less mortgage rate, that is an asset in today's market. And that gives you some leverage in a lot of different ways. If you're selling for one thing, if you've got an FHA or a VA loan,
it could be assumable.
So there's a lot of things you need to understand with that. But that's why a lot of people are also staying put and they're not moving, is they've got a great interest rate, they've got a great monthly payment, their taxes, have only gone up 3% per year, as opposed to when you buy a new home, it's going to reassess at the higher value. So yeah,
I have a
different. So I kind of understand. Yeah, go ahead.
Different resolution for homeowners in 2026 is do the thing for you, right? If you're wanting to upgrade your kitchen, or if you want to paint, or if you want to add on, or you need another garage, or whatever it is, do it for you. Don't do it for the next buyer, because what we see a lot of times is sellers are doing things for sale They're like rushing to redo some things or upgrade something, redo the bathroom, whatever it is that they've always wanted to do. And they know that when they sell the house this coming year, they're going to need to do it for somebody else. Do it for you and enjoy it.
Yeah, no, that's a
Right.
good point. And people are staying in their homes longer, so it makes more sense to do those upgrades.
I have a quick
and
question.
Yeah,
Have you been getting those emails from your mortgage servicer about doing a refinance, cash out refinance, or a HELOC?
of course. Yeah, there's a lot of that. You're going to see a lot of that as rates have come down over the last year, and rates have come down over the last year about 1% since the beginning.
Interest rates.
Yeah, interest rates, mortgage rates. So you're going to start seeing people doing some more refinancing and using the equity in their home as leverage for maybe paying down some other, high interest debt like credit cards or something like that. But again, that's a bigger conversation with a mortgage professional to understand if it makes sense for you. So, all right. Gosh, that was a lot of resolutions.
Okay. Topic 2, predictions.
Okay.
Being that we look at the housing market day in, day out, all day, every day,
24/7.
24/7, I want to know what your predictions are for 2026 housing market and
Yes. So
real
that's
estate.
interesting. Let's push back on some of that national
Yeah.
stuff that gets in the way and clouds everything.
Well, what I'm going to say first off is that Albuquerque is traditionally a steady, stable, not dramatic housing market. We see a lot of headlines out of places like Austin, for example, or even Phoenix, where, they've had some dramatic changes, right? So Austin, for example, had a dramatic run up, and now they've seen some pullback in home prices, for example. But they've also done a ton of home building and construction, unlike Albuquerque. We've done some, but not much. So to me, the story of 2026 is going to be continued, I'm going to say slow, but kind of stable home sales. We're going to end up around just over 10,000 homes in 2025 sold in the greater Albuquerque area. And I'm going to say it's pretty close to that, maybe up a little bit, but I don't see anything pushing it, one way or another. I don't see a pullback though.
So a little bit more comparable to 2025.
Yeah, I think it's going to be closer to 2025. Again, moderate sales, steady pace of sales, but still it's going to feel sluggish compared to even years like 2018 and 2019.
Okay, so predictions for home prices in our market in 2026?
Okay, here we go. I'm going to go out on a limb. No, this isn't out on a limb at all. I'm going to say 2 or 3% home price appreciation. And that's my, what we call base case, in the sense that, that's the way it looks like right now. If mortgage rates for some crazy reason drop, which doesn't look like it's going to happen, that could fuel the market, and that could bring more buyers in. And more buyers also means more sellers, because sellers are more normally buyers too, right? It's just going to get more activity going. So that could, but I still see 2 to 3% year over year price appreciation, which is below the long-term average for our market, but still steady.
So what I'm hearing is it sounds very like a very normal, steady, quiet market. Not quiet, but just nothing dramatic.
Yeah, really, since everybody's been talking about, okay, the correction is coming. I feel like we've come through the correction. The correction started somewhere in 2023, 2024, all through, definitely all through 24, all through 25. It's just been kind of slow and steady and sluggish. Prices haven't appreciated that much, but they have a little bit. I think this is our correction.
So you don't see prices going down, like below.
I don't, because
Zero.
There's this whole thing about home prices are very sticky, in the sense that we were talking about it earlier. Sellers are much easier. Let me rephrase this. Sellers are willing to sell if they get their price, but if they don't get their price, or they feel like they're losing money, they'll just take the home off the market and stay.
Okay. So best forecast isn't a headline?
Yeah, that's for sure. There's, we'll talk about this in a second with myth busting, but there's so much noise out there in the real estate world, because it gets a lot of clicks on social media and in the news sources. And that's not where you want to get your information about what's happening in the real estate market, because generally what happens is they'll take a little nugget of truth, and this is true in lot of media, right? But they'll take one little nugget of truth. And so let's say they'll talk about Austin, right? Home prices are dropping drastically, right? But they're talking about Austin, right? They're not talking, or they're talking about Southern Florida where the prices have dropped. They're not talking about what's happening in Chicago and Cleveland and the Midwest and in the Northeast where home prices have continued to go up 3, 4, 5, 6%, right? So,
Well, and they're not talking about how much they ran up and how little they've come down compared to how much they went up in 5 years.
exactly.
Right? Those people are not about to go to foreclosure, and even in Austin, generally. Some of them maybe are definitely down, but if they bought in 2020, 2021, it went up quite a bit since it's had a little pullback.
Yeah.
So, okay, let's move on. What's the next topic?
I wanted to dive a little bit deeper
Okay.
and maybe tap into some vulnerability here and
Okay.
get your personal predictions for what you think is going to happen.
Well-
What are you willing to put out there
On the record.
on the record?
Okay. I'll give you a couple easy ones. One is that affordability will be the word of the year. Affordability in housing circles has been around for a while, but it's going to become much more mainstream. I'm going to say both political parties have recognized that affordability is a trigger point for many people, and they are going to work it like crazy. And housing is one of the biggest affordability things for people. So you're going to see a lot about affordability in 2026.
I would say that one of the other things to say is the doom headlines will keep coming because that's what sells.
Yeah,
So we'll continue to see that probably forever.
Yeah. The other one I'm going to put out there, and I got this when I went to New York to that Housing Economist Summit, affordability is going to catch up. It is already caught up a little bit from the peak bad affordability for housing. Affordability has to do with obviously the cost of your home, but it also has to do with incomes. Incomes have come up a little bit. They've been coming up. Home prices have stabilized. They're actually below the inflation rate, for example. So affordability is going to be catching up slowly unless, something strange happens. But it looks like that's where we're going to go.
I would say that one of the things we can stick our neck out on is that new home construction is going to continue to be steady.
Yeah, I sat with one of the big production builders, the VP for production, and they still have projects coming, but they're not going crazy, right? We're going to see continued new home build and new home neighborhoods in the Albuquerque market.
So outside of housing, Tego, what do you think about the economy in general for 2026?
Okay, this one I'm not going to put my neck on the line for. I'm going to call this one anyway, not on the record, but I think the economy could surprise on the upside this year, 2026. I think there's a lot of things setting up for that. And usually it's one of those things where you don't see it until it's behind you.
Right.
But there's a lot of things that are setting up to that might drive a strong economy in 2026. So we'll see where that goes.
Boom. Yeah. Okay.
The other one that I would say I'm not going to put money on, but I feel like we're past the correction phase, if you will, in the housing market. Again, when I say correction, I'm not talking about price declines. I'm just talking about pricing stabilization, pricing moderation, and appreciation moderation. That's what we've seen. It does look like we're basically either going through it or we're past that phase, and we're gonna, yeah. So that's what I see there. Predictions that you're willing to put out there, Tracy, or not put out, or kind of say you won't hang your hat on it, but you think you like it?
Predictions I'm not willing to put on the record.
Okay.
I would say predicting what the interest rates will be in 2026.
Yeah.
We've got Jerome Powell probably moving out of that position, and
Right.
so things could change there. But I think, making a prediction on anything being very much different from where we're at doesn't make sense. I think predicting home prices will be exactly up or down or this or that. I think what you said earlier, 2 to 3% up, is very realistic based on all the indicators. And I think our listeners who listen to us every week know a lot of the reasons why we feel that way. It's not just we think that. There's very good
Yeah.
data to support that.
Well, and we've got the feet on the street that we see as well. And
What about predictions you're not willing to put on the market,
well,
on the
I was going to say
record?
it's funny because a couple of years ago, so what I'm going to say is the best time to sell or the best time to buy, in the year, which is funny because I did a post a couple of years ago where I said the best month to sell your home, right? Because it's
Statistically, it's true.
statistically, right? And there was a month, it's like March, right? It's March, April. You put it
Market.
on the market. That's usually when you see the most activity and you
In
see
Albuquerque.
in Albuquerque. And I thank you for all those clarifications. Yes. And the
But
thing is, the reality is, and I said it back then, is if the time is right, the time is right.
right,
Right.
it's
And
when
trying,
the seller needs to be on the market is the
yeah,
best time for them.
yeah. And for a buyer, it's really the same thing. It's like, when is the right time for you? And, I will say this, I'll put this one on the record, is waiting for mortgage rates to come down to, whatever, 5.5% is probably a fool's game right now. It sure doesn't look like we're going to see anything like that. But of course, predicting, like you just said, mortgage rates is,
Although we have seen buyers close in the last half of this year in the 5.5 to 5.75% range with some dollars towards buying down their interest rate that if they're planning to be in the house for a while makes great sense,
yeah,
right?
yeah,
It goes so much further than a price drop on the house,
yeah.
right?
Okay.
So
All right. Let's do last topic. Do we have one more?
Yes, we have one more. Housing myths to leave behind in 2025.
Oh, I love this. I love myth
oh,
busting.
I love this one. Can I jump in?
Yes.
No, I'm going to go first.
No, mine is it's 2008 all over again.
Yeah, no.
Not going to happen. Okay.
Yeah, yeah. I mean, it's so funny when I see those because it's like, really? Are we still doing this?
Yeah.
Come on.
Moving on.
Yeah,
We're leaving it behind.
We're leaving it's 2008 all over again. I hope this leaves behind because it's been so debunked over and over and over again, which is institutional, investors, or Wall Street's buying all the home, or BlackRock or Blackstone's buying all the homes and driving up home prices. That's been so debunked, but yet I still see it every once in a while, but I think most people
Looming
that have
headline.
half a brain have looked into it and realized that that's not a real thing.
Yeah. I was thinking of is that the market is the same everywhere.
Got to leave that one behind.
Gotta leave that one behind. We're not Austin and Albuquerque. Albuquerque's not Denver. We're not Phoenix. We're not Southern Florida. So follow your local.
We're not Minnesota either.
Yeah, and we're not. Yeah, I mean, you think about some of these booming markets like in the Northeast. It's like, yeah, we're not that either, right?
Right.
So it's
Mhm.
the thing that's interesting about Albuquerque is we're kind of insulated from a lot of that all around. So we're slow and steady, which is good. So yeah, real estate is local.
Yep. Follow your local experts.
Okay, another myth to leave behind in 2026. I would say rates have to drop before anything else can happen. They don't have to be low per se. We need to make sure that your affordability is in line and that you're a homeowner. There's all sorts of reasons why it's great to be a homeowner. So let's leave that behind.
Yeah.
Agreed.
And okay, I'm going to do the myth of the crashes, always around the corner. And the thing that I've said multiple times in this pod is that it seems like we've kind of gone through it already. We've already kind of gone through the correction. And so, fear-based decision making isn't a good strategy long term. And you have to, make your decision and then, move forward if it's the right thing for you at your time in your life. And
Totally.
it works for your life. Yeah.
I think another myth is that sellers make the rules, and that's really not the case. Some sellers still think it's 2021, and it's not. Buyers have more options and more power in the market today, but it's a lot more balanced than it has been, and I think 2026 will continue to see that.
Yeah.
So much more balance.
Another myth is renting is cheaper than buying, or why buy?
Yeah. And that's, that one is always out there, and you see that one in the headlines as, oh, renting is way cheaper than buying. And if you're doing it just dollar for dollar, it probably is, right? But that's one very simple calculation. It's not looking at the big picture, your long-term plans, so security for you, your stabilization for you. There's so much more to it, and having your own place, building equity, for savings by paying down your principal every month. All that stuff has to be considered. It's not just a dollar for dollar comparison.
Being a little bit more of the community, being part of the community a little bit more as a homeowner.
Yep,
Um,
exactly. Yeah.
Making the house your own.
Yeah, all those things is part of that decision. It's not just a math. It's not just a math decision for sure.
So there you have it, our recap of 2025 and our predictions and resolutions for 2026.
There
So
we go.
go.
Oh, look at that. There
I
we
have
go.
I have a little bit of another topic I just want to talk about. You know, we are in residential real estate. We
Yeah.
do help buyers and sellers. So we're Tracy Tego and Estelle Venturi here with Real Broker in Albuquerque. We have an office here in the North Valley. We're happy to meet with you here or wherever, your home, a coffee shop, whatever works best for you to talk about your goals for 2026. I just want to mention, too, that we have some really great homes coming up for sale in the hopper in 2026. If you're looking for something special, we might have it coming. So, let us know what your needs are and how we can help you meet your goals for the next year. We have some awesome team members that really specialize in helping sellers, buyers, whether you're a first time, a luxury, a VA, all of these things we have passion for, and we're happy to help you and connect you. Like I said, my word for 2025 was trifecta. We like to help people put things together, the house, the lender, and us as your real estate expert, so that you get well taken care of and meet your goals and have a great time doing it. So there we go.
Thanks, everybody. Happy New Year. Oh, there we go. Happy New Year. Oh. We got to get the right camera. There we go. There we go. Take care.